Are we really concerned about the deficit right now? I mean,
You're not?
You know, we're talking about. I'm worried about it, but I'm worried about the fact that if we don't do something about this U.S. economy and we push ourselves into recession, who cares about the deficit? I mean, this is, you know, I can't control Congress's spending, but we can do things that help the consumer go out and create jobs if you're a small business owner. And if you're a consumer, develop some confidence that you'll go out and spend money. That's going to bring us the growth and in turn bring us the economic relief. Then you focus on the deficit, and then you focus on the tax increases. But right now, I'm not sure that everybody understands the depth of the problem well enough.
Kevin, you have said you don't see unemployment going down this year. You're calling for 8.5% unemployment all the way in December 2011. What are you factoring into those predictions?
Well, again, I think that corporations in general, this is the private sector, not the government. The government can add or take away jobs as they wish, but corporations have not really been motivated to hire because they're making money in efficiencies that are things other than having employees on the books. Like there's been a tremendous opportunity for corporations to lower their overall debt cost by what the Fed has done in driving and keeping interest rates low. So you really have seen a lot of balance sheet improvement. You don't have to carry as much inventory. You kind of take a page out of the airlines book. You try to match the planes up with the seats that you sell, and you find yourself a much more efficiently run business. What you don't have to do is add a whole lot of employees.
One thing that you've said recently in your notes is that, you know, any growth for the U.S. economy basically has to be accompanied by specials, credits, and giveaways. So it seems to me that you don't think this U.S. economy can grow without major government aid.
Well, I mean, that's where we're seeing the positive growth in our numbers. And so, yeah, if you, again, carving out housing, I mean, the credits for housing are where the stimulus behind the housing increase numbers. You take that away, the numbers fall apart. Jobs were, you know, the artificial creation of jobs came from the government, both through the census and through their own needs. So, you know, you take those away, jobs fall again. So, you know, it's hard to think that we can develop enough confidence without the stimulus. Although I'm not a big fan of it to a point. You almost wonder whether you shouldn't let this thing all just settle itself out and pick up the pieces afterwards.
You've said, look, don't let the optimism of the equity market get in the way of the facts here.
Well, I think that it tends to be an optimistic group almost all the time, and the bond guys, which aren't sexy, they look at this thing and say, I'm always skeptical. So I think the optimism is always embedded in the equity market, and the hopes that these companies, as they improve earnings, will also improve stock values. But I do think there's a point here where that enthusiasm runs out if we don't see the economy trailing along behind it.
Talking about headwinds and tailwinds for the U.S. economy, clearly given your bearish stance, I mean, you say we're going to have many more headwinds than tailwinds going forward. What's the biggest concern, the biggest headwind right now?
Well, I think, the biggest headwind sits in Washington with both the Congress and the president, in my opinion. So I'm not trying to get too political here, but, you've got some big issues beyond the tax issue between now and the end of the year. But you have some major elections coming up in November, which could change the way Congress looks. So what I worry about is if you have a change of control, that we get very little done out of Congress over the next year, when we need to get a lot more out of Congress done over the next year. Now, the headwinds, again, regulatory headwinds are very much in place. This is a big deal. This Dodd-Frank bill to law was very important to the president, but it also means that we are restricting a number of businesses from actually pushing the economy forward. For instance, the skin in the game rule here. Securitization is going to go down in this country if you got to take a 5% stake in every one. Wall Street, they're big kids. They take the ball and run. They'll do something else with their money. But it is not going to help the economy with these types of regulations. So the regulations are coming out of Washington, and in fact our own Congress and the elections may be the headwinds for our future.
All right, Kevin Giddis joining us. Appreciate it. Thanks so much.
You bet. Thank you.